At the beginning of the year, Malaysia was surprised by the news of massive floods occurring in several states. According to the Department of Statistics, the overall losses amount to 6.1 billion ringgit, including public and private sector. This flood has affected a lot of Malaysians, especially financially. Due to the event, many Malaysians lost their house and car. On top of that, some could not get compensated for their losses due to not having Takaful or insurance to cover them. As a human being, we are constantly exposed to perils and consequently financial losses. Thus, it is important for all of us to implement risk management and take necessary action to avoid losses in the future. One of the ways to manage risk is by having Takaful or insurance. Globally, Takaful has been around since the 1970s in Sudan. In Malaysia, we can see a major growth in the Takaful industry since the establishment in 1984. The Takaful industry in Malaysia used to have only one player in the industry. As of recently, with over 15 Takaful operators nationwide, Malaysia's Takaful industry has emerged as an important component of the financial system. Insurance has been established way longer than Takaful, with the first insurance company established in 1759. Following this, the insurance industry has expanded worldwide when countries around the world began to trade internationally. The insurance industry was supervised by Bank Negara Malaysia in 1988. Since then, regulatory and framework were enforced, and there has been significant improvement in Malaysia's insurance industry, as increasing market penetration and trading ratio for the industry has improved.
Takaful and insurance play an important role in providing financial protection in the event that something unexpected happens, such as suffering from a critical illness, being involved in an accident, suffering property loss, or death. In general, Takaful can be considered as the Islamic version of insurance. However, there are differences in the principle and method of how Takaful operates. Takaful is not only limited to Muslim, but it also open to non-Muslim who wish to subscribe and receive the benefit of Takaful. Moreover, Takaful is an insurance plan that has Sharia compliance features. It was created as an alternative to conventional insurance to avoid prohibited elements of ghar, maisir, and riba. This means that under Takaful, there are many other Sharia compliance products such as medical Takaful, vehicles Takaful, and many more. Based on the Takaful contract, the agreement made is based on the concept of ta'awun, which is cooperation and helping each other. Each member contributes in the Takaful fund, and in the event of any untoward incident, all the members will receive the same amount of claim. Last but not least, when compared to conventional insurance, Takaful policyholder retain ownership of the fund. Contributions from each member are then invested in halal fund or Sharia compliance funds to earn income from the investment. If the fund generate a profit, it will be distributed to the members, and in some cases, including to Takaful operators. This creates a win-win situation for all members.
The first comparison is between the characteristic of risk. According to Takaful, participants in the Takaful plan reach an agreement to jointly share risks, which are subsequently segmented and distributed between the participants. Meanwhile, conventional insurance companies take on the risk and insure it for the new owner. Moving on with the concept between Takaful and conventional insurance. For the government law, Takaful is based on Sharia law and government law. However, conventional insurance is only governed by the government law. Then, based on elements of Takaful, Takaful prohibited to gharar, riba, and masjid. However, conventional insurance is allowed to these three elements. For the obligation, as an insurer, the Takaful operator is responsible for managing the fund and making benefit payments. In the event that the fund is inadequate, the operator of the Takaful must make interest-free loans available. For the conventional insurance, it is the responsibility for the insurer to pay the benefits in accordance with the terms of the agreement using money from either the insurance fund or the shareholders fund. For the obligation as an insured, All participants in Takaful scheme are obligated to make payments into the system, and it is anticipated that any profits will be equally distributed among them. For the conventional insurance, as an insured, policyholders are required to make their premium payments to the insurer on a regular basis. Thank you. I will invite another presenter to present for the next slide.
Meanwhile, as for insurance, paid premium is an act of obligation against the insurer based on a sale and buy relationship. In Mudarabah, participants pay Takaful contributions in terms of tabarruk that forms a pool of Takaful fund. Then the funds are used to invest in Sharia-compliant investment, and profit generated will be distributed to the participants and Takaful operator. Meanwhile, for wakalah, participants obligate to pay under Takaful scheme offered, and the donations received will be divided into agency fee and Takaful fund. Agency fees comprise of agents' compensation and managerial expenses. The Takaful fund is invested to generate profit, which any excess gain will be divided among participants and Takaful operator. Why Takaful is better than insurance? This is because Takaful guaranteeing that no member can benefit of another, which fosters collaboration among policyholders for the benefit of all. Takaful also distributes investment gains among participants and shareholders according to the Mudarabah or Wakalah models. Meanwhile, conventional insurance entails making investment that may be risky and produce profits that will be only gained by the firm. Plus, under a Takaful contract, some of the money will be reimbursed to participants if no claims are filed, as the surplus is given back to members as a renewal discount. However, in insurance, policyholders will not receive back their contribution even when there is no claim.
Nowadays, most insurance companies that previously only offered conventional insurance had start offered Takaful insurance plans that follow Sharia compliance features, which are Etika that offered Etika Family Takaful, Hong Leong Group offered Hong Leong MSIG Takaful, Prudential that offered Prudential BSN Takaful, Zurich offered Zurich Takaful, and last but not least is AIA that offered AIA Public Takaful. On this video presentation, we will focus more on the AIA insurance company. We will elaborate more on the product offered by the AIA in the conventional insurance and Takaful.
Next, I will explain differences on insurance product offered by the American Insurance Association, AIA. The product name is A-Life Wealth Builder. Basically, A-Life Wealth Builder is an investment-linked plan that provides customers with a significant death benefit and a financial safety net for one's family after their passing. With Wealth Awards and Wealth Booster, the plan rewards customers up to 6 times the reward payment if they save more, save for longer, and maintain financial discipline. The coverage period is up to 70, 80, and 100 years old. Moving on to the product's benefit, firstly, it is a lifestyle protection for family. This plan provides your family with a lump sum payment equal to the whole amount of coverage in the event of death or total and permanent incapacity. This plan will pay twice as much if a customer dies in an accident, 3 times as much if the accident occurs on a bus, rail or airplane, and 6 times as much if the customer dies as a result of a natural catastrophe. Next is Wealth Rewards. This plan rewards policyholder with as much as 5% of the coverage amount at the end of the policy's anniversary upon reaching age 65, and every 10 years afterwards until maturity when no withdrawals are made and premiums are paid on time. Next, I will invite Humaira to further continue this presentation.
A-Life Legacy Builder is an example of products offered by AIA Takaful under life insurance. A-Life Legacy Builder is a family Takaful plan that helps to build a lasting legacy for a better tomorrow, ensuring loved ones are taken care of to pursue their hopes and dreams. Besides that, the coverage of this Takaful are up to 70 to 80 years old. For the premium, regular contributions are varied according to the person entry age and their maturity age, like whether they choose to cover up to 70 or 80 years old. The annual contribution rates are for 5-year terms is 11,535 ringgit, for 10 years term is 6,320 ringgit, for 20 years term is 4,195 ringgit, and for full coverage term is 2,775 ringgit.
For product benefits, contributors' family will receive 100% to 600% of coverage if any of the events like death, total permanent disability, accidental death during Hajj or Umrah, accidental death to natural disaster, or while in public conveyance. Second benefit, it is a special legacy plan for the future generation. If contributors pass away due to accidental causes, an additional 100% of the current coverage amount will be credited to the contributor's investment fund for their child's education saving. Next, it eases family financial burden. Estate administration could be costly, but the financial burden of the family is eased with estate management benefit. Besides that, an additional amount up to 20,000 ringgit in the event of contributors' death to help ease the cost of administering the estate. Moreover, it also helps the community. AIA Takaful will pay an additional rider sum coverage to a charitable organization of contributors' choice upon death or permanent disability.